Gold. A word that evokes images of ancient treasures and enduring value. Throughout history, gold has been a safe haven in times of economic uncertainty. Why? Because gold has intrinsic value. It is a tangible asset. You can hold it in your hand. Unlike paper money, gold's value doesn't rely on trust in governments or financial institutions. It is a store of value. This makes gold a powerful hedge against inflation, which erodes the purchasing power of paper money. When inflation rises, the price of gold tends to rise as well. Gold also offers protection from counterparty risk. Counterparty risk is the risk that the other party in a transaction will not fulfill their obligations. With gold, there is no counterparty risk. You own the asset outright. In uncertain times, investors flock to gold. It is a safe haven asset. When markets are crashing, gold can help preserve your wealth. Stocks, bonds, mutual funds, these are examples of paper assets. They represent ownership in companies or debts owed to you. Paper assets offer the potential for growth that gold does not. Companies can grow their earnings, and bond issuers can make interest payments. This can translate into significant returns for investors. However, paper assets come with risks. Market risk is the risk that the value of your investments will decline. This can happen due to factors such as economic downturns, changes in interest rates, or geopolitical events. Counterparty risk is another concern with paper assets. When you invest in a stock or bond, you are relying on the company or government to honor its obligations. If they fail to do so, your investment could be at risk. A balanced portfolio is essential for long-term financial success. Diversification is key. Don't put all your eggs in one basket. Gold and paper assets can coexist in your portfolio. Gold acts as a hedge, protecting your wealth. Paper assets provide growth potential. The right mix of gold and paper assets will depend on your individual circumstances, risk tolerance, and financial goals. A financial advisor can help you determine the appropriate allocation for your needs. The financial markets are constantly changing. What worked yesterday might not work tomorrow. That's why it's important to stay informed and be prepared to adjust your portfolio as needed. During times of economic growth and stability, you may choose to have a higher allocation to paper assets. This allows you to participate in the market's upward movement. However, when economic uncertainty or inflation rears its head, shifting towards a higher allocation of gold can help protect your wealth. Remember, gold is a safe haven asset. The key takeaway is this: diversify your portfolio. Include both gold and paper assets. Adjust the allocation as needed based on economic conditions. By doing so, you can position yourself for financial success while safeguarding your wealth.